traders at UBA say that they expect the bond market to sustain the tepid momentum despite improved offers on the mid to long end of the curve. Chuka Nwachukwu, the head of ALM and balance sheet management at UBA, joins me now as we wrap the markets for the week. Thank you so much for joining me on the show today, Chuka. And let's look at what you expect on the markets. The first trading week of the fourth quarter, what are sentiments so far?
Thank you, Ken. Good to see you again. The week started, we only had just 4 trading days this week because Monday was a public holiday. The week has been really quiet, especially on the bond side. Though we've seen a huge system liquidity improvement. For example, on Wednesday, system liquidity was around over 1 trillion. So that has actually driven the activity on the fixed income market, even though on the bond side, like I said earlier, we've seen quiet trading, but then there were a bit of interest, especially on the 2027, then 2026, also on the longer end, 2053. On the bill side, we also seen interest in the July and June bills. Quite unlike last week, where we saw a lot of interest on the 1 year, which is the 26th September 2024. But this time, traders are showing a lot of interest on the July and then on the June and July bills.
All right, so we saw those CRL debits kicking on Wednesday. How did that play in the market then? Yeah,
despite the CRL debit, the market still is still a bit liquid. It's still very much liquid, and that has actually driven the activity. Like I said earlier, we've seen bullish sentiment, and don't forget last week was the NTB auction. Over 173.5 billion was offered and sold, but the subscription was well over 700 billion. So some of this demand is still in the market, and that's why we've seen interest in, especially in the June-July bills.
Yeah, but how are investors reacting to that bond auction calendar then?
Yeah, nothing really changed. It's still the same maturities, still the same volume, 360 billion. Investors, obviously has priced it in. Don't forget, this is towards the end of the year, last quarter of the year. Most investors will look to be on the quiet side and then look to take profit for the end of the year. So I believe that the market has already priced it in, and really there isn't much difference it will make.
All right, but on the I&E window, what has been the activity like this week, and how do you see that playing out next week?
The I&E window is still the same demand supply here and there. The bit of depreciation. Yesterday, market was around 756 levels. Today, it's trading around 775 levels. So it's still on, demand and supply market, and we still have huge demand with little supply. So we continue to see market, trade within these levels.
Yeah, because now market is fairly liquid, like you rightly put it. I'm trying to imagine for the rest of Q4 how you anticipate that's going to be.
Yeah, for this week example, we've seen, this month, there will be a huge coupon payment, over 400 billion will come into the market, and that will improve the system liquidity. Also, of course, the usual FAC payment last month, about over 900 billion was
paid.
And then, so we expect about that amount. So we are going to see a highly liquid month, and obviously CBN will probably come in with some CRR debit.
All right, thank you so much for that breakdown on the markets today. I'm speaking to Chuka Nwachukwu, the head of ALM and balance sheet management at UBA.